Coming up on Market to Market, Secretary of Education Arne Duncan prioritizes the role of agricultural teaching. USDA Secretary Vilsack visits Market to Market to offer his outlook for the rural economy. And the University of Iowa revisits a play from the 1980s and uses football to help farmers. Those stories and market analysis with Darin Newsom next.
Funding for Market to Market is provided by Pioneer Hybrid, which supports efforts to help families pass their farms into the hands of the next generation. Pioneer, science with service, delivering success.
This is the Friday, April 20 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mark Pearson. Despite higher gasoline prices, U.S. consumers loosened their purse strings last month. According to the Commerce Department, retail sales rose 0.8% in March. Some of the gain, of course, is due to higher prices at the pump. But even when sales of autos and gasoline are excluded, retail sales still increased 0.7%. The improvement in March pushed first quarter retail sales to a record high of $411 billion, 24% above the recession low tallied in March of 2009. Questions remain, however, in the housing and labor markets. The National Association of Realtors reports sales of previously owned homes fell nearly 3% in March, and the four-week average of initial applications for unemployment benefits rose last week to its highest level in 3 months. Those seeking work might be wise to examine demographic trends in rural America. Between 2002 and 2007, the number of farmers 75 years or older increased by 20%, while the number of producers under the age of 25 decreased by 30%. The lack of young people choosing to farm also has yielded a dearth of agricultural teachers. Well, this week, the Obama administration conducted a town hall meeting in Wisconsin hoping to address both trends.
This week, Secretary of Education Arne Duncan and Secretary of Agriculture Tom Vilsack announced an interagency agreement to recruit the best and brightest of the next generation to pursue careers in agricultural education.
And we want to do everything we can to strengthen education in rural communities. And I've said repeatedly that we can't have a strong country if our rural communities, our rural economy isn't strong. And the only way we get there together is through high-quality education.
The two federal departments will exchange a variety of information and participate in joint activities in hopes of making higher education affordable and accessible to all. And the goal is to help prepare students for careers related to agriculture, food, and natural resources.
We used to be a country that valued both those who work with their head and their hands. And we've now become a country that sort of values the folks who work with their heads and undervalues those who work with their hands. And we ought not to be that kind of country, because that's what made us great.
Part and parcel to the program is motivating young people to become teachers in rural communities.
In South Korea, which is a very high-performing country educationally, their teachers are known as nation builders. It's a really interesting concept. Well, I think our teachers are nation builders as well, but we don't treat them as such. We don't respect them as such. So I've been very public. Not everyone agrees with me. I think we need to double starting teacher salaries. I think a great teacher should be able to make $130,000, $140,000, $150,000. I think a principal should be able to make a lot more money. And let me be clear, no one goes into education to get rich. Teachers are the most altruistic people I know. But you also shouldn't have to take a vow of poverty to do this work.
While pushing salaries for teachers higher may be less likely to occur, Duncan says incentives are already in place to encourage teachers to stay in the profession. Among those mentioned were forgiving college loans after several years of service and loan repayment schedules based on income. Vilsack believes USDA also can provide encouragement for new teachers. He pointed to infrastructure improvements in schools through the Broadband Initiatives program and a proposed initiative to give low-interest home loans to new teachers to encourage them to stay in rural areas.
Congress has begun the arduous task of writing the next farm bill. The pending legislation is expected to end direct payments to producers and overhaul the so-called agricultural safety net. Before the measure gets to President Obama, however, lawmakers must narrow the gap between Senate Democrats and House Republicans, who this week approved major cuts in social programs that account for the vast majority of farm bill spending. Noting the rural and urban impact of federal farm policy, the Obama administration's point man on agriculture prefers the measure to be known as the Food, Farm, and Jobs Bill. Well, I sat down with Secretary of Agriculture Tom Vilsack Friday, and he offered an optimistic outlook for rural America. Secretary Vilsack, welcome back to Market. Good to have a chance to visit with you. And several things that we want to touch base with you on. And I know you get these questions constantly. Farm economy has been very strong. In a nutshell, give us your outlook. What do you want to tell a group of farmers watching this program right now about what their industry is going to look like going forward?
First and foremost, be proud of what you're doing and make sure that your friends and neighbors understand what you do, because I think we need to do a better job of appreciating agriculture in this country, and we need to do a better job of marketing the benefits to this country that agriculture brings. Secondly, be very confident in the future. If you look at expanded export market opportunities with new free trade agreements and the discussions of the multilateral Trans-Pacific Partnership that the President's pushing, there's going to continue to be strong exports. The local and regional food system provides local markets and new opportunities. The bio-based economy, starting with biofuels and renewable energy, but now expanding to virtually chemicals, fibers, fabrics, and polymers, is unlimited in its opportunity. Conservation at record levels and the outdoor recreational opportunities it creates with access to farmland, our voluntary access program, are all income opportunities. So I'm very, very strong on the ag economy and very, very proud of what our farmers and ranchers and producers are doing for the country.
All right, you mentioned a couple of bright spots. Trade agreements, which have been quite successful. I know the Korean one was particularly important to you. Are we going to see more of that down the road? You talked about the Asian initiative.
I think that's the key, Mark. I think we're looking now not so much at a bilateral conversation as a multilateral. Many countries in the Southeast Asian area, tremendous opportunities in Indonesia, Vietnam, Malaysia, obviously continued expanded opportunities in China and Korea, South Korea. Japan, I think, is going to re-engage, hopefully. We're looking at opportunities in the beef market reopening there at some point in time. So I think there's just unlimited opportunity in that part of the world. At the same time, you know, there are opportunities in South America to recapture some of the market that we lost because we didn't have a free trade agreement with Colombia. Now we do. The Panamanian agreement will be implemented very soon. I just think that there's tremendous opportunities. And, of course, we continue to have strong relationships with Canada. That's our number one trading partner. They sort of switch places with China from month to month. We obviously have some issues with Mexico, which we need to work out. And when we do, I think we'll see expanded opportunities there as well.
You mentioned the Farm, Food, and Jobs Bill, which I think is a great name for the Farm Bill. I think it's more accurate than anything else we've had in the past. The large portion does go to food assistance programs, which most in agriculture want. They want to see that. There is concern about the safety net going forward. Obviously, we've had 5 good years in agriculture, as you very well know, good net farm income. Still a lot of concern about particularly crop insurance, federal crop insurance, what might happen there. Right. What's your outlook?
Well, I think you're going to see a Farm, Food, and Jobs Bill that makes a continued commitment to that safety net, and I think crop insurance is going to be at the center of it. I think you're going to see some effort to try to complement and supplement crop insurance with some kind of revenue protection effort. It won't be like the direct payments. It won't be a program that will be subject to criticism or as much criticism as the current program has been, and it will be one that people will better understand why we're doing what we're doing. Let me just simply say something about nutrition assistance, because this is often lost in the discussion about those programs. Every time a dollar is spent in a grocery store, 16 cents of that dollar finds its way into the pocket of a farmer. So if you're proposing to cut, as some have proposed in the House, $150 billion out of those nutrition assistance programs, that may sound like a good idea, but the reality is 16% of that $150 billion, roughly $20 billion, would go into a farmer's pocket. That will be a loss to farmers. That, by the way, is more than crop insurance and direct payments combined.
I know it's driven by Congress's schedule, but what's your outlook for a new farm bill? When would it occur?
Mark, we've got to have it. And here's why. Apart from the fact that farmers need some assurance that there will be a program and that they understand what the program will be, we don't have a disaster program.
Right.
It expired September 30th of last year. So if there's a drought, there's a flood, there's a fire, there's
which we had every one of last year.
Every single one, 55 million acres impacted. Yeah. We're going to have them this year. You know, you can bet on it. No disaster program. So what am I going to say to those farmers in the Midwest if their lands are flooded? Crop insurance, that's it. There's no livestock forage program. There's no livestock indemnity program. There's no SURE program. There's nothing to protect you. That's why it's important to have this legislation done this year. Secondly, it is not going to get any easier fiscally to do it next year than this year. This is a much better year to do it, in my view. So it's got to get done, and I applaud the Senate, both the Democrats and the Republicans on the Senate Ag Committee working together to get a bill through their committee, get it on the floor, get it passed, and then put pressure on the House to get it done.
Mr. Secretary, we're out of time. Thank you so much for stopping by.
Always, Mark.
Farmer and philanthropist Howard Buffett, son of billionaire investor Warren Buffett, called on agricultural producers this week to join the fight against hunger in rural America. Buffett's Invest an Acre program will encourage U.S. farmers to donate profits from a single acre's production to rural communities where advocates say malnutrition is a serious yet often overlooked scourge. While producers today are embraced as part of the solution, 30 years ago, many farmers were themselves the victims of a prolonged economic downturn in rural America. But the agricultural sector got some much-needed help during the farm crisis of the 1980s and again last fall from one Midwestern university. And as Laurel Bauer-Bergmeyer discovered, the plan scored points with agricultural interests by using football to help farmers.
The University of Iowa Athletics Department and the Iowa Farm Bureau reached deep into the old playbook recently, reviving a campaign initiated nearly 3 decades ago. America Needs Farmers, or ANF, was launched in 1985 by legendary Iowa football coach Hayden Fry.
Over the middle, and Hayden Fry's is that up, baby. And the Hawkeyes have taken the lead.
Iowa was the nation's top-ranked team for several weeks that season. The Hawkeyes won the Big Ten championship and advanced to the Rose Bowl. But even as jubilant fans reveled in their team's success, rural America was gripped in what came to be known as the farm crisis, a prolonged economic downturn that drove thousands from the land. Hayden Fry knew the crisis affected not only his players, many of whom hailed from farming communities, but also thousands of Iowa fans whose livelihoods relied heavily on a strong rural economy.
It was tragic. It was terrible, closing down farms and people hurting. And of course, I'd recruited quite a few farm boys on my football team, and they're salt of the earth. They wanted an education. They were hungry. They were well disciplined. They were very strong because they'd been working on the farm. And so I came up with the idea that America needs to know that the farmers need help. And so I came up with the idea of ANF decal, America Needs Farmers. And it was amazing the great response we got, not only in Iowa, but across the nation.
When Hayden came to us, it was basically a no-brainer. Why not do it? Why not support the people who have been supporting us?
Mike and I were both team captains in 1985, and Hayden approached us with this idea during a time that was really a rough time for farmers, literally in America, but especially here in Iowa. And he came up with the ANF logo, America Needs Farmers, as a way to support the farming community. And back then, Iowa didn't have a lot of big corporate sponsors or anything like that. It was literally, the individual farmer who came to the games, who wrote a check every year to the football program that was the heart and soul of the community of Hawks.
The farm crisis of the 1980s devastated the agricultural sector. As commodity and land prices collapsed, thousands of farmers went bankrupt and were forced to sell their land in an economic crisis that rivaled the Great Depression.
We lost about 20,000 farmers during the 1980s, and that's a terrible loss.
Craig Hill, president of Iowa Farm Bureau, has eagerly endorsed reviving ANF as part of a partnership between his organization and the University of Iowa.
In the 1980s, America needed farmers. Hayden Fry recognized that. But never more than today, the globe needs farmers. So we recognize a growing population and growing demands for food, and America needs farmers and the world needs farmers, and so it's a good idea to bring this back.
While the ANF logo was developed during one of the worst economic times in agricultural history, today's farmers face a new set of challenges. Hill, a fourth-generation livestock farmer from Milo, Iowa, points out that even though producers currently enjoy favorable prices for most major commodities, they also must contend with soaring input costs. That's why the Iowa Farm Bureau and the University of Iowa decided to revive the campaign. And current Iowa head coach Kirk Ferentz followed in his predecessor's footsteps by putting ANF back on the players' helmets. To celebrate the return of ANF, the university and the Farm Bureau declared October 15th ANF Day at famed Kinnick Stadium in Iowa City. The ceremonies featured special activities prior to kickoff of a nationally televised game between Iowa and Northwestern. Market to Market caught up with a couple former Hawkeye players to get their impressions of A&F.
Well, that's how I grew up. I was a farm kid, and I realized the importance of farming, not only to myself, but to the state and to the country. And, what better way to, support such a great cause.
It's a Hawkeye trademark. Coach Fry started it and put a stamp on it and really brought it to life. But now that we're trying to get it going again, and me being a farmer now and owning some farmland, it really strikes home because it is an issue, and we need to get more farmers out there.
The highlight of A&F Day was the University of Iowa's first card stunt. On cue, 70,000 fans and 4 grandstands held up colored cards to reveal a patriotic display of red, white, and blue, and the iconic America Needs Farmers logo. Rural America has come a long ways since the farm crisis of the 1980s. But Hill and Fry still believe A&F is just as relevant today as it was 25 years ago, because America does, in fact, need farmers.
Well, actually, the A&F today may be more important than it was back in 1985 and during the 80s, during the economic depression, because there's less farmers today. More people have moved to the big cities and given up farming, and they've lived an extremely hard life. But the ones that have survived, that have hung in there, do a great, great job, and they need to be recognized for what they've done for America and for the world.
For Market to Market, I'm Laurel Bauer-Bergmeyer.
Next, the Market to Market report.
The downward trend in grain prices continued this week as corn fell to a 2012 low on Wednesday. For the week, May wheat lost 8 cents, while the nearby corn contract moved 17 cents lower. Soybeans broke ranks with the coarse grains as the May contract gained 10 cents, and the nearby meal price advanced more than $10 per ton. In the softs, cotton exceeded the $90 level as the July contract added $1.28 per hundred. And in the dairy market, May Class 3 milk futures gained 18 cents, while the June contract moved 43 cents lower. In livestock, June fed cattle down 62 cents, feeder cattle advanced 38 cents, and the June lean hog contract lost $2.82. In the currency markets, the euro gained 136 basis points against the dollar. Crude oil advanced 22 cents per barrel. COMEX gold shed $17 per ounce. And the Goldman Sachs Commodity Index lost more than 5 points to settle at 677 even. And here now to lend us his insight on these and other trends is one of our regular market analysts, Darin Newsom. Darin, good to have you back.
Thank you, Mark.
Mixed bag this week, I guess we could say. I mean, what can you say? We're so early in getting the corn crop in the ground. A lot of people are focused on that. There's a lot of interest in what's going on with wheat production and the stand that we have coming for 2012. And let's start there. Let's start with what you see for the wheat market. Again, I mean, the kind of the repetitive thing has been there's plenty of wheat globally, but we're using a lot of wheat. We're feeding a lot of wheat.
We have seen demand stay strong. Now, the interesting thing about this year's crop is that it's running 3 to 4 weeks ahead of time, so ahead of pace. So, we're going to be looking at a very early harvest in wheat, and the condition right now, because of the winter moisture and the early spring conditions, we're seeing a much better crop condition rating right now than we have in years past. So, we've got an earlier crop, could be a bigger crop, and then that could start to put some pressure on the market again a little bit earlier than normal, but we could start to see some pressure coming back into the market. What it's also going to lead to is a higher chance of larger double crop acres. And right now the debates are going to be beans, going to be corn. Right now it certainly looks like it's leaning towards beans over a large part of the southern plains. So I think wheat's going to be very important to watch, not only its condition, but how it moves along here as it matures.
If we're selling wheat, and there's not, I don't think that much old crop left on farms. There's some out there, but making new crop wheat sales, is this a buy, hold, sell time period in your mind? Could we look at maybe a larger crop here in the U.S. based on current crop conditions and maybe want to pull the trigger?
Yeah, you're almost to the point where you're going to have to pull the trigger in new crop wheat because seasonally we go down through May, and if we do see an earlier crop, it means we're going to have more pressure on this market, and so it's going to be very difficult to establish rally. So if we see some sort of move up, let's say we get some spillover support from corn or beans or maybe a lower dollar index, maybe then we can get a few sparks of life in the wheat market, and we're going to have to use those to get some sales. And I don't really want to sell here, right at these levels because we've been under such pressure. But if we get any kind of bounce at all, given the fact that there's really nothing bullish out there in the market, I do think we're going to have to increase some new crop sales.
All right, let's talk about the corn market. There's been some China news, there's been some positives, but this old crop corn market has softened up quite a bit.
Yeah, the reason is really it's an interesting situation. We've got a divergence going on here. We do have bullish fundamentals. We've got very strong demand for U.S. corn. We've got tightening supplies. We've known that for quite some time. It's not getting any better. National average basis continues to run very strong. But the problem is we cannot get investors interested in this market again. They continue to sell while the fundamentals get more bullish. This situation doesn't happen very often. If it does, it's usually the opposite. But at some point, either the fundamentals are going to come back into play or everyone's just going to throw in the towel. We're going to hit that tipping point where we're no longer concerned about the old crop and we're just going to be focused on the larger new crop. And that's going to could possibly add more pressure to the market.
All right, so the big money is taking the money and running then.
That's what the biggest thing in corn is right now, is the continued liquidation of long positions by non-commercial traders. This started back
and this was a huge position, too.
It was. I mean, if we go back to I think early 2011, we were up to almost 620-some thousand contracts. Well, that's been whittled, more than half, by more than half. So there's a lot of this pressure that's occurred in corn has come from the investment side of the market, because fundamentally, market probably should be going up.
We're going to be on tractor seats here. We're going to be planting corn. A big chunk is planted in my home state over in Illinois, some in Iowa, some in Missouri. We're seeing that corn belt really start to move, but we'll see the bulk of the players probably the next week or two on tractor seats pulling planters. That's usually a time to make sales. Is this contra-seasonal this year?
It is. I mean, because normally the corn market does move higher up into mid-June. We usually get that planting season and early growing season rally in the market. We're not seeing it. So not only do we have bullish fundamentals, but we have a bullish seasonal tendency that just simply isn't coming into play. This all points to the fact investors just aren't interested for whatever reason it might be. But until they join the market again, until they come back into the market, this corn could have some problems.
All right. Buy or sell on old crop corn at this point? You want to hold?
I still want to hold. I mean, there's just too many bullish factors out there. We talked about basis, we talked about spreads, we talked about the longer-term commercial outlook. Want to continue to hold the old crop for a little while.
New crop.
New crop, that's a scary thought when we're talking about that, 95.5 million acres, increasing production, increasing all these things. But again, if we can get some sort of seasonal rally up into, say, later spring, then I think we pull the trigger. We don't want to wait too long, because there is going to be that tipping point where we're no longer concerned about old supplies.
All right. As we look at where the money's going, could it be going into the soybean pit? We've certainly seen a move there.
Yeah, and just as with corn, there's a lot of rumors floating around right now in the soybean market. You talked about how soybeans closed up 10 cents for the week. Well, it added something like 30-some cents today, so it made it all on Friday alone. Yeah, it made it all up on today. And there was talk of Brazil possibly pulling its offers off of the export table.
Concerned about that crop size.
Exactly, and possibly even canceling some of its export shipments. So, that hit the market and it immediately reacted. Now, come Monday, we'll find out if it's true or not. We'll find out what the market really believes. But it does seem to indicate there's a lot of money moving over into soybeans right now. Should probably keep pushing it higher again. Its seasonal rally usually goes up into early July. So we've still got some time, and we've still got a lot of fuel to burn up in the soybean market.
And of course, we still have time of that corn trend too. As you say, it hasn't materialized yet, which we normally see it. So it's a cause of concern. Let's shift. I want to talk about livestock, Darin, with you tonight, because we had that massive sell-off on cattle. A lot of people wondering, what's the deal? And I know the consumer was balking a little bit at some of those higher prices in the meat case. Now the rumors are kind of moving around that. The grilling season's underway. For some of us, it never ends. But the grilling season for a lot of people is underway. And perhaps we're going to see things start to move again. What's your take on fed cattle going forward?
Well, the biggest thing about the cattle market that I've seen is, we talked about this divergence in corn. Well, we had just the opposite. We had the opposite situation where fundamentals weren't very bullish in the cattle market, and they had been getting soft for a while. Yet money kept pushing the markets higher.
Right.
Once those adjusted back, that's what led to that huge break that we've seen.
Those funds came back out.
Funds came out. Markets collapsed. Came back to its fundamentals. But now, as you just said, we are starting to see some demand pick up again. So I I think we could stabilize this cattle market. I think it's going to have to start in the cash market, and I think we're starting to see some early signs of that. But once we do, I think that's going to give us some stability in the cash market, in the cattle market, and it should start to slowly work higher again. I doubt if we test our highs that we've seen recently, but we should start to work higher again.
All right, well, there's a little bit of an upbeat outlook. Calf markets underpinning, last time you were on, you said it's in extremely good shape, but obviously we're going to be sensitive what happens with corn prices.
They are, and you know, they're looking at this lower corn market and saying, you know, this isn't all that bad for us. Now, you know, if the corn doesn't move, calf's still going to look pretty good. The calf market's still going to look pretty good. If we start to see a better fat cattle market, then that's also going to provide support to the calf market as well. So, out of the cattle markets, I still think the calf market's the stronger of the three that we'd be looking at.
Even with that, as the cow-calf producers, there were some good prices out there further out. I mean, should we be looking at marketing that fall, and that's for the spring calf crop this fall?
Yeah, you know, if you can get some good prices locked in, and particularly, you know, if you've got all your feed costs locked in, you've got all your inputs locked in, and you can make pretty good money with what's out there right now, sure, take some of it, because these markets are getting more volatile. We're entering that time of year. So if you can lock it in now, probably not a bad thing to do.
And I know it's all protein supply, and I know we've got poultry and other issues out there, but the key one has been pork. Pork's been such a great export story, but has that story started to change or evaporate a little bit here?
It certainly seems like. I mean, it looks like demand's just evaporated in the pork market, and we can see what's happened on the charts for the lean hogs, and you know, in some of the cash markets as well. I think it's going to be a while for it to come back. You know, maybe it can get some support from some of the other markets, but right now, of the livestock contracts, it certainly looks like hogs remain the weakest.
Right. Darin, you always have a good handle on energy. The energy market didn't move much this week. Crude oil didn't move much. Longer term, where do you think we're going to be? Are we going to hover over $100 for the summer?
Yeah, you know, again, we just don't have the fundamental catalyst for the domestic West Texas Intermediate market traded in New York. There's really no reason for it to go much higher. I mean, we're going to bounce around probably between 104 and 100, you know, and 100, maybe get up a little higher than that. But long term, there's just really no reason to push it higher. But they are going to keep a very close eye on that international Brent crude market because it is more fundamentally bullish.
Darin Newsom, as usual, we appreciate your insights, and thanks so much for being with us tonight. That'll wrap up this edition of Market to Market. Now, if you'd like more information from Darin on just where these volatile markets may be headed, visit the Market Plus page. It's right there at our website. You'll find expanded market analysis, audio podcast, streaming video of our program, and links to our Twitter feed and our Facebook page, and it's exclusively at the Market to Market website, and it's all free. Of course, you'll also want to join us again next week when we'll examine why some are concerned that too many will come if they build additional attractions at the Field of Dreams. Until then, thanks for watching. I'm Mark Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Funding for Market to Market is provided by Pioneer Hybrid, which supports efforts to help families pass their farms into the hands of the next generation. Pioneer, science with service, delivering success.